Alrighty, so let's give a go at this inventory flow. So remember, we have three kinds. We have FIFO, LIFO, and weighted average, and that's what we're looking at. This is Chapter 5, Participation Points. So I'm hoping I don't confuse you more. I have a cat jumping on me. You wonder what I'm moaning about there. So first of all, we'll take each one of these scenarios and we'll put it onto the grid here, or the little worksheet, to help you organize thoughts. So on January 1, we've got the date January 1. We have an inventory balance of 200 units at $10. If I multiply that out, that means I have $2,000 in inventory at this point. I have 200 units and $2,000 in inventory. So if we move this down, on January 10th, right here, we sold 150 units. So when I say sold, we're going to put that in cost of goods sold. So we can keep track of the amount of the cost. Okay, so I have 150 units right here, and I sold them for $40 each. Now that only shows up on the income statement, that 150 of 40. That total will be in the revenues. Right now what we're keeping track of is the cost of goods sold in this sort of a subsidiary ledger of sorts, keeping track of it. So I have, and I'm using FIFO, so I have 200 in stock that cost $10 each, and I'm now selling 150 of these. So if I put 150 here, they cost, okay, this cost $10. So I multiply that out. So my cost of goods sold is $1,500. So I have that taken care of. And those numbers came from subtracting, or taking the scenario 150 at 40, taking 150, and seeing that I only have that layer of inventory. That's my first amount of inventory I have available to me, and it cost me $10 each. So it's 150 at 10. So I have $1,500 in my cost of goods sold. But now I've got one more step. I've taken 150 out of inventory. So I'm going to subtract 150 from the 200, and I now have 50 in inventory. I'm going to multiply that times the cost, and that gives me $500 left in inventory. Maybe it would help if I did put cost in there, so that instead of just each. So each cost, I don't know if that will help or not. So now I have 500 in inventory, I have $500 worth of inventory, and there are 50 in stock. On March 14th, I bought 350, and I paid $15 for each one of them. So each one of these costs $15, and I have to put those in inventory now. So that, I can't mix these two. I can't mix the 350 and the 50, simply because they cost, I have a different cost. So I need to bring this 50 at 10 into the new inventory total, and I need to transfer this 350 at 15 to the new inventory. So this becomes my new inventory in layers, or in, we have different levels, or however you like to distinguish that. You could call them batches, you could call them piles, as Josh did. This is my first pile, this is my second pile. This pile is worth $500, and this pile is worth $5,250. And my total inventory is worth $5,750. I've added these two together. So now let's go to the next scenario, which is on the 15th. And this is where it gets a little bit interesting, because now I'm selling 300, correct? But I'm using first in, first out. So I have to sell my first layer or pile first. So that means that layer or pile is going to be costed out at $500. So I have 50 at 10 worth $500. I sold 300. So now if I take 50 and subtract that from the 300, I still have 250 more that I need to find a cost for. That would come out of the second level, or the second batch or pile. So I'm going to take 250 of the 350 and sell it. So now I have 250 times 15, or 3750. So this becomes my cost of goods sold, or my cost of merchandise sold. And I have one more thing to do now. I have sold this layer, so that one's gone, and I've sold 250 out of the 350. And what do I do with that? Well, I'm going to subtract the 250 that I took out of this level, and I'm going to have 100 left. 350 minus 250 equal 100, and each one of those costs $15. So now I have $1,500 in inventory. This is the hardest part, because you start with 300 sold. 50 of those 300 cost $10. 250 of those 300 cost $15. So that gives us our cost of goods sold, and it gives us a new inventory figure. Then on July 30th, we come down here, we purchased 450 units at $20. And that gives us a total of $9,000 in new purchases. So now I've got to keep my inventory in piles or separated. So I bring this 100 at 15 down for your first level. And I'm going to add this 450 at 20. So now I have 100 at 15 and 450 at 20. I have a total of 550 parts, and those parts or merchandise, or however you want to look at that, are worth $10,500. So on October 5th, I sold 430 units. Now again, I'm using first in, first out, so I've got to get rid of this very first pile or level or layer of inventory at $15, and that's worth $1,500. That leaves, I sold 430, I subtract 100 from 430, I come up with 330 that I have to take out of the second layer or pile. And those are at $20. So it's $330 times $20, and that cost of goods sold is $6,600. Now I'm not done, because this layer's gone, so I don't have to worry about it, but I have some left in this pile, don't I? So if I subtract 330 from 450, I come up with 120, each costing $20, so I have $2,400 left in the inventory. So if somebody asks what my inventory is, I could tell them it is 120. They each cost $20, and my inventory level is $2,400. If they ask me what my cost of goods or cost of merchandise is, all of these are added, and it is $13,850. Now that's using FIFO, which means I always use the first pile first and then the second pile. So I'm always taking the very first one in for the first one out. That is first in, first out. Now I'm going to end this one, and then I'm going to do the LIFO. So hang in there.